Good morning to all. Today we are going to talk about final accounts. It is a final cycle of accounting cycle. First cycle is journal, after that ledger and getting trial balance. After getting some error and rectify it, we have to prepare the final accounts. Hence, the final accounts is a statement which shows the final result of the business through the following statements. Likewise, trading account, profit and loss account and balance sheet. The trading account is a statement prepared for the specific period to know the trading result of the business. It contains all direct expenses and the direct incomes of the business, which gives gross profit or gross loss of the business. And profit and loss account, the statement which account contains all indirect expenses and indirect income of the business, which gives net profit or net loss of the business. And finally, balance sheet. It is a statement shows that the financial position of the business at a given date by disclosing the amount of capital contributed and how the same has been invested and the value of the assets and liabilities and their nature. Now we are going to talk about trading account. It has a T format and debit side and credit side. In debit side, all direct expenses and credit side, all direct incomes. In that, 2 opening stock, 2 purchase, less purchase return and 2 direct expenses, which means production expenses. For example, if you are going to produce on brick means we have to spend money for soil, water, labor such as wages and carriage inward and gas and fuel. If any absence of any one expenses, we can't produce the brick. That is why it's called as direct expenses or production expenses. In here, carriage inward, wages, freight, import duty, gas and fuel, factory expenses, royalty on production, such as all direct expenses. Meanwhile, in credit side, buy sales, less sales return and buy closing stock, which are all incomes belongs to the particular product. That's why it's called as the direct income or production income of the business. If finally, we can get gross profit or gross loss. If expenses more than income means gross loss. If income more than expenses means gross profit. So, if we are calculating the trading account, we can get gross profit or gross loss of the particular business. Following that, we have to prepare profit and loss account. It is also T format, debit side and credit side. In debit side, all indirect expenses which are non-productive expenses, which means which are expenses not directly connected with productions of goods and services. If you are producing on brick means which are expenses not directly influence the particular brick. That's why it's called as indirect expenses, such as management expenses, financial expenses, selling and distribution expenses, and depreciation and maintenance expenses. If you are getting gross loss from the trading account, we have to put here. If you are getting gross profit, we have to put credit side. Such management expenses are office salary, rent and rates, telephone charges, audit fees, insurance and general expenses. For financial expenses, interest on capital, interest on loan, discount allowed. For selling and distribution expenses such as advertising, commission, bad debts, good on rent and carriage outward. Finally, depreciation and maintenance is depreciation and repairs. Meanwhile, in credit side, we have to put non-productive income or indirect incomes, which are incomes not belongs to the particular product, such as by interest received, by commission received, by interest on debentures, by interest on drawings. If more than income, it's called net profit. If more than expenses than income, we are getting net loss of the particular business. Finally, we have to prepare balance sheet. It's also called financial position statement. It is also T format. In left side, liabilities and right side, assets. Liabilities means the company wants to repay to someone, such as shareholders or creditors. In first, the company wants to repay first capital, in addition that net profit, in addition that interest on capital. We have to add it, and less drawings, less interest on drawings and less net loss if any. And finally, we are getting exact amount to repay the particular shareholders and long-term liabilities and current liabilities. In long-term liabilities, loans on mortgage, bank loan. And current liabilities are sundry creditors, bills payable, bank OD, outstanding expenses, income received in advance. So these are items of our current liabilities. And meanwhile, in asset side, there are three classifications. One is fixed assets, another one is current asset, and fixed assets. In fixed asset, generally the asset means the value owned by the company. In fixed asset, goodwill, land and building, loose tools, furniture and fixtures, patents, trademarks, and long-term advances. In current assets, closing stock, sundry debtors, bills receivable, prepaid expenses, investment, accrued incomes, cash at bank, cash in hand. These are all current liabilities. And fixed assets means preliminary expenses, discount on issue of shares and debentures. So finally, we have to tally that balance sheet equal to, assets equal to liabilities and liability equal to asset. Thank you.